Happy Monday, traders. It's 8:02 a.m. Chicago time. Thanks for joining me again for another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The time is now 8:02 a.m. Chicago time, 9:02 Eastern. Thanks for joining me. The overall market stance this morning, we always want to start out by looking at whether the market's moving putting risk on or pulling risk off. So far, it's a mixed bag. We have crude leading the pack this morning, trading at 61.71 on the February contract, up 26 cents, up 0.42%. Pretty much everything else is muted. The S&P 500 is down 2.75 points from Friday's close, down 0.1%. Bitcoin is taking a little bit of a dive this morning, nothing too serious. And the euro is trading down 79 pips. Other than that, it's just a mixed bag. The 10-year notes are higher by 2.5 ticks. The bonds are up 9 ticks, it looks like, and Euro stocks, Eurobond, and so on. And DAX strong again. The DAX trading at 13,355, up 0.36%. Again, it's a mixed bag. One of the key things to remember is that this is the Monday after Labor Day. Not Labor Day. Non-farm payrolls. It's likely to be fairly quiet. Now, the Friday trade was, again, I'll show you in a minute how unusual it is. Not that it's a reason to lose our risk controls or to be upset at the market or anything, but it's important to be aware of what you're doing or what you're looking at when you're trading. So, as far as what's on deck for this week, that is top tier. It's a light week this week. Today, not much. I'm only looking at the high importance stuff. Not much. Tomorrow, nothing really of high importance. Wednesday, we're looking at some manufacturing numbers out of the UK, crude oil inventories. And we're looking for PPI on Thursday, and Friday we're looking for CPI, core retail sales, and retail sales. Those are the top tier numbers coming out of the G20 countries. So it's a fairly light week on the calendar. We do kick off earnings this week, so we're looking for that. And then let's take a quick look at what we've expected, what we expected on Friday. Switch your color. So Friday, opening up at a gap, the expectation was for a pullback to the prior high. This is a new all-time high on the open. Pullback to the prior high, 27.29, put in the day before. And then looking for a push to 27.37, and then for the market to into the afternoon to kind of get sloppy and go sideways and trickle down into the close. The second key scenario is that the market has a responsive move immediately, gets back into value high of the prior day, which is at 27.27. And then just goes sideways after that initial move, and then later on to drop down into value low at 27.2375. That did not happen at all. The third idea was for a market to push through immediately, give us a P-shaped profile, push to 27.37, and hold steady into the close. Okay, so here's what actually happened. Market responds back to value high. So we have hypo 1. Again, here's hypo 1. Right? So hypo 1 was pulled back into the prior day's range, or the prior day's high, somewhere around there. and that's actually hypo 2 that was looking for a drop into value high and then later a drop lower. We push into value high, which is deeper than expected on hypo 1, but we're still looking for the market to test back up. If it had failed, if we had tested down, pulled back up, held this mid area and fell back through, target would have been point of control and would have been the value low area, which is the edge of this gray area. The gray area of the graph here, of the profile, fairly balanced profile on Thursday. The gray area is the value area. It's the first standard deviation as measured from the point of control of the histogram. This is simply a histogram that's sitting on its side. So that's what we're looking for. And then instead it pushed up, pulled back to the prior high, and then you get this 4 1/4 point move up. Second largest move of the day. Here's your first one, first largest move of the day, 475, 4 1/4. And then we get to pull back to about mid and VWAP, and then off to the races we go. I can't say that this was easy to predict and easy to jump on. It's a double. We ended up with a double distribution profile, which was really quirky. Here's the neckline. This is this low volume node at the mid is important for today. 2735 is really important for today, and we didn't bother to move the point of control up to the high of the day, but we finished with a weak high. We finished with a weak high, and we finished at the high. We have not seen such a week in a long time. So this is where I want to switch gears here and talk about the big picture. This is last week. Okay. This is last week's profile. There's Monday, Tuesday, Wednesday, or Tuesday, Wednesday, Thursday, Friday. Tuesday, Wednesday, Thursday, Friday. Straight up, the market did not fold back on itself. Wednesday against Tuesday definitely did not fold back on itself. Thursday against Wednesday, so it's not checking the auction at all. And then Friday we get a small overlap down to the value high, and then the market closes at the high. So I go back and I look for where has this happened before. And as I look for it, I can't find anything that looks like that. Just imprint this profile into your mind here, how it's leaving two gaps behind. It is not overlapping at all. And the idea here is to find where it's done this in the past. See, we have this very prolonged profile right after Thanksgiving in November, at the end of November. But we still had, I mean, look at this blue day, which was a Friday. Look at this. It just crosses the entire range. Not the same. We don't have a gap and run, gap and run, gap and run without a retest. Okay. This is a similar day down here. Okay. But we still have days that have overlapped right down there. Okay. We have not had this. I went back 200 weeks. We have not had this kind of action. And here we are approaching the beginning of 2017, not seeing it. Not seeing it. See how this overlaps? Tuesday's overlapping Monday. And in the next few days we have balance. That's fairly common. And then here's the next closest thing. Market opens, overlaps, runs, and then starts to continue to go higher. Very thin, very prolonged initiative profile. Okay, clear sign that higher time frame traders are in play here. This is the first week of December 2016. This was shortly after the election. We had another long day down here, and then we finished the week at the high, which we don't do a lot of after a big run. So the following weeks are higher. and that's the expectation. So what we had last week was really just a ripping scenario higher, and the bulls are firmly in control. And I talked about this earlier in the week to say that, hey, if you're short, this is really a tough place to hold on. The other thing I want to point out from an auction perspective here, just to get context of who's in control and how good of a job they're doing, right? The key questions we want to ask. What has it done? What is it trying to do? How good of a job is it doing, whatever it's trying to do? And what it has done in this situation is it took 2 weeks of balance and overlap. So this week it traded in balance, beautifully balanced week. The next week it tested down the prior balance. Here, the black line is the prior point of control. It tested into it and built an excess. This is what we call an excess. And the reason it's an excess is because the market in one period pushed down and pushed right back up to come off that low. This was a Friday. We sold off, but we ended up coming back and opening at a much higher price. And where do we catapult from? We catapult from balance. See, this is just a beautiful example of how I'm always describing balance and the point of control as the source of the energy. This is where the most traders participated and traded with each other. This is the point from which the explosive move happens. The more that trades at the point of control and the more compact the value area is, the more likely the market is going to take off from there. And that's what we had last week. So you could see it consolidating at the same set of prices. We talked about 2685, 2687, that area. And then the market just rams right through new all-time highs with gaps. Does not bother to look back. And re-auction those prices, which is what we do. All the weekly profiles that I've shown you so far, and I know this is getting lengthy, I'll cut it down. All the weekly profiles we've done, so we've looked at going back to early December 2016, you can see a lot of overlap. We tend to test to retest, and this is my expectation. More likely than not, we're tending to retest the prior area, check to see what kind of interest we have, and then we start to confidently move away from the accepted price as participants kick in and want to push in a specific direction. And so that's where we are. Where does this lead us to? It left us with, again, a profile that, again, here the market just keeps pushing and pushing and pushing, which is fine. It left us with a weak high on Friday into new all-time highs. It left us with a fair amount of energy below. And what we have here, let's see. So volume has been kind of low since the beginning of the year, but it's been a short week. It's still a holiday week. 778,000, 952,000, 973,000, and 913,000 contracts in a day session versus 1.1 plus million contracts in a day session. Still been light. It was a holiday week. Still, schools are only now starting up today in Canada, most parts in the U.S., and here we are back in business, and we've pushed the overnight high to 2747.75. So we've dissipated. We're looking to see if we've dissipated all the energy at the top of the profile or not. Looking at the overnight session, market just sideways until the European Open. Right, European Open right here, right about there. That's the first bar, and then the sellers come in, take it below mid, and it stays below mid. We're back in the range, and then sellers start to trickle in, and we're looking for, again, 27 35 as a base, as initial support. That's key this morning. Watching out for that. So what we have here is a sort of inverted cup and handle or saucer formation or whatever. I don't trade patterns, but it helps me see. I don't use moving averages or anything. It helps me see what the market's trying to do with the auction. And most importantly, the profile helps me see how much of it, how intense is it. Without the intensity, it doesn't really mean that much to me. Back to business. So this is what we learned in the overnight session. About, I think, 30 or so % of the overnight inventory short. It's relatively balanced. You can see that the delta is hovering around zero. It's up or down a little bit, and it's been just sideways mostly. Participation to the short side did not take place until well into the European session. And so there it is. As far as what we're looking for going forward this morning, I'm looking for this to open. It's opening in range just outside of value. There's no real value here from Friday's action. We have a double distribution profile, as I said, a quirky looking double distribution profile. I expect it to chop around. I'm looking for this to drift down to 35. I'm looking for a lot of chop this morning, a lot of two-way trading. The quote board is mixed this morning. There's money that's moving to safety, but it's not really staying there. There are different levels. The bonds are a certain amount. That it's just a mishmash of allocations this morning. I'm looking for a lot of chop, and then I'm looking for it to make an attempt at that week high. But most of all, I expect the range to be fairly tight, 27.35 to about 27.44. I expect this high to be taken out at some point in the day. I expect the largest impulse for the day to be upward in continuation with everything else and with the support that we already have. That's the primary scenario. So this morning, very important to watch. Look at these buyers. Oh, let me move that down so I can look at these buy prints. Excuse me. Look at all those dots. You see these dots, these algo dots here? Those are all buying on the offer. Those are buyer aggressors versus the red dots, which are sprinkled along, right? So you see it back here. So the order flow is to the accumulation side. There's an active buyer in here, or buyers. You could see it consistently that there are many, many, many little prints on the offer versus prints, the red dots on green, prints on the bid. You could see the sellers becoming a little more active here, but overall it's not very sustained. So this morning, I'm looking for what happens when we get down to 35. You could see there's some okay bids here at 35. I expect as the market starts to fall that these become brighter and brighter and brighter as more bids come in and fill in this area. I expect that to act as support initially, and I expect it back up and through to 27.44 is the key trade idea for today. So that's what I'm looking for. Again, open auction, drift, consolidate, get an impulse, and then start to drift up potentially to 27.44, at least for 9 points. Okay, so 44 on the high, 35 or so, 35, 34 on the low. That's the primary scenario. I'm running out of time. Secondary scenario. Secondary scenario is we reverse, which is not very much expected given the overnight stance. We open, chop, we push immediately out, and then we start to consolidate. Eventually we'll get to the overnight low, base off of 35 for a pop into the close. Tighter range, 7 to 8 points. That's scenario number 2. So if we start to push higher, I'm not going to fight this. I'm not going to fight this on the way up to short it. So that's what I'm looking at. I want to leave you with a note. This this Thursday, I'm speaking on Futures IO at 4:30 Eastern, Thursday the 11th, about success requiring accountability. An important topic for traders as we embark on a new year here. That's the URL. You'll see it on my Twitter feed. You'll see it blasting across. I hope you can make it. That's all I have for you for today. Good luck, and I'll catch you tomorrow morning. Take care.